see. Let me just double check and get synced up here. Let the users come in. Again, our viewers coming in. There we go. Viewers are coming in. I can see that come. Okay, awesome, everyone. So welcome. Make sure that you say hi in the chat there to confirm that it's working. And good afternoon, good evening, or good morning, depending on where you're joining us from. And welcome to another episode of the AI Circle, brought to you by the iFlip YouTube channel. I am your host, of course, Aaron Yoon. I am the product manager here at iFlip. And you may be wondering, it's been a while. It's been a while since we've done this because Kelly was on vacation a couple of weeks ago. So we skipped it. So it's been a bit of a hiatus for everybody. Okay, all right. So yeah, we have Lee joining us. And of course, always good to see the internal team. We have our very own CEO joining us, Randy. Thank you for joining us, Randy. And of course, we have Teresa, winner from last week's trivia. Hello, Teresa.
Hi, Teresa.
All right. Now, we have a lot to get to. But before we can get to any of it, we have to do everyone's favorite part, which is the disclosures. So please.
Oh, goody, Aaron. Can I listen to your disclosure?
Yes.
All right. Thank you.
I know everyone wants this so badly. Give me a second here. All right. Disclaimer. iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. I gave it a little extra oomph for you, Kelly, to welcome you back from your vacation.
Thank you.
And of course, we're saying hi to Leslie. Thank you for joining us, Leslie. And glad to hear it, Teresa. We were our winner last week. You got your Amazon gift card. Or was it the previous show? I don't remember which one you won on. But yeah, see that you got your gift card. This is proof here, everybody, that we do deliver on our word. The prize for tonight, though, since we're talking about trivia at the moment, the prize for tonight, though, is slightly different. It's actually of a higher value, and we'll get to that. Make sure you stick around to the end of the stream to participate. For now, though, Kelly, I'm going to kick it over to you. We did have a little bit of a hiatus last week, or last episode, and catch us up on the markets.
Okay. Can everybody hear me?
Your camera seems frozen.
Yeah, I know. My camera seems frozen. Can you hear me?
Yes, we can hear you just fine.
I don't know what happened to the camera.
Yeah, I don't know what happened here. Give me 1 second. Let me try to see if I can refresh that for you. Give me 1 second. Nope, that didn't do it. Okay. We could just go straight to the screen share if you like, Kelly.
Yep.
Or
can you see that? How about this? When I change the screen share, does that change? Yeah, that's changing.
Yeah.
Okay, that part's working. So, all right, I'll get into it. Maybe this is something to do with internet or something else, or I don't think I have anything on pause over on this end over here. So I'll get into it as best I can, knowing that I am frozen on the screen for everybody. By the way, everybody,
apparently, Kelly, it's also frozen on your good side. So that.
Oh, thank you. And it's good to be frozen.
At least it's frozen on your good side. Thanks.
But to all those listening out there, I sometimes wish it would be a profile picture, because you can't believe the more often you're photographed, the more often you think you look stupid. So I just want everybody to know that. It's like, wait a minute, why is there a picture of me looking like that out there on the internet? And I often wonder why. as I stare into the camera that is not filming me. Anyway, let's talk markets, everyone. And by the way, thank you and forgive me. I did take a much needed vacation and I wasn't available for the last AI circle. It was needed and it was refreshing. It does allow you to sometimes stand back, remove yourself from the forest so that you can actually see the individual trees. So what did I miss while I was gone? Really not much. I saw, if you're looking right now, everybody, at a chart of the Dow Jones Industrial Average, I came back about a week ago and the market actually started to make its break literally a week ago, the day I came back. But the market had hovered here at an upper Bollinger Band on the Dow Jones Industrial Average. And it has retreated now from around 35,600 to 34,400. And by the way, it is not really particularly looking that good right here. It leaves the Dow Jones Industrial Average up less than 10% in the year, around 8. This is the beginning of the year over here on the left. If you can see it, where my mouse is kind of looking, you could see that despite what seems like a great year this year, and it has been for the NASDAQ, Dow is only up 8%. S&P has made a little bounce off of a first Bollinger Band here. However, it remains up only 15.5% for the year after being up as much as 21. So where do we go from here, and what is the AI saying? In a nutshell, the correction may be that we all expected, or at least I certainly did, amongst many other inaccurate pundits, I might add, earlier in the year, that there is a problem with the economics of this country and the infrastructure of this country in terms of being able to have markets continue to try to rise in the face of much higher interest rates. So we all understand there's a lag effect, but the lag effect normally should have occurred back in March, April of this year. We are now literally 4 months beyond that. Why? Why has this happened? What is the delay? Well, the first point I can make is we are coming off of an unprecedented area in time, which was COVID. COVID definitely created a different kind of market, a bifurcated market. If you all remember, the initial response to COVID was the market moved very low, very quickly in March of 2020. But it recovered almost as quick and made new highs. It recovered because they realized that the federal government stepped in and moved the debt of this country from $22 trillion to $30 trillion. $8 trillion. Some estimates are $9 trillion. Were put into the economy by the federal government. Basically, almost an increase of 50% of debt. That's now why we have $30 trillion of debt. And to top it off, the interest rates that they thought could never go higher because it would kill the US economy, because they would have to service this much higher interest rate on debt. So many people felt that the Federal Reserve couldn't raise rates. Well, they did, and the deficit is higher. And now we have the problems associated with that. That has definitely come into the interest rate market in terms of the 10-year note and the 30-year bond, both of which are up 50 basis points literally over the last week and a half. That's a huge move. Basically, it's making the yield curve less inverted. In other words, before it was about 1.9%. Now it's down to 1.4% spread between the long bond, the 30-year bond, and the short T-bill. One yielding over 5.5%, and the other one yielding 4.2% on the 10-year note. So we have these big spreads that have narrowed in terms of the inverted yield curve. What does that mean? That generally means that they're now extending something called maturity. We are now going for longer duration instruments. my expectation is that the long end of the curve will probably continue to go a little bit higher. And if that's the case, we will no longer have an inverted yield curve, but we will have a very, very non-sloping yield curve, which means another reason for recession. These are recessionary calls from interest rates. I think what's happened is that the money is now running out of the American consumer. And as a result, it's now being pulled out, not just because he's overspent, as we see in the credit card debt now exceeding $1 trillion. Prior to COVID, the number was 400 billion. It has increased 150%. That is another reason why the American consumer is alive and well, all right. They're buying things. That's one of the reasons earnings have done okay and the country has not gone into a recession. But they've been buying things using their credit cards. And this includes paying off rent and mortgages. Obviously, this will not have a happy ending. This is now starting to be reported a bit in some of the major media outlets that credit card debt has risen to all-time highs. We also have repossessions on automobiles at all-time highs going back to 2006. This is information that our AI machine learning uses extensively. We have found that especially credit card data to be the number one best input to teach a computer how to predict the price of the market on a go-forward basis. It is that particular data stream, credit card debt, and it is ballooning. And that is one of the main reasons we have been out of the S&P 500 itself, the instrument, the spider, for the entire year, or at least most of the year. Going forward, if the market retreats further lower, which I expect it will, we're looking very cleanly, by the way, tonight, not at the election and the GOP debate. However, at NVIDIA is due to report shortly. And when it does, most expectations are that NVIDIA is going to rally. And right now in the post market, it is up another $30 a share. It's post market now at $4.99. So their earnings did come out. They are better. It is an S&P 500 stock. It's also a NASDAQ stock. So we are going to add another 470, another $30. We're going to add about 8% is the way it looks now to the market tomorrow morning. So that means that we're going to have some kind of a rally in the NASDAQ tomorrow early on, and we'll see what happens from there. Again, going back to the craziness, we're still boiling down to the same 7 stocks that have led the market higher regardless throughout the year. The rest of the market has definitely decayed even further since I was gone. We notice it in the Dow Jones Industrial Average, almost close. It's not far from a break even on the year. I would not be surprised to see the Dow Jones down on the year and then everybody taking a victory lap because the markets were so good during the year. I wish you could see me gesticulate. If you look at Apple here, everybody, Apple had a good day today. However, its post price is going to be down about 40 cents. So even though NVIDIA did so well, Apple has definitely come off its highs. It is no longer worth $3 trillion. It went from 196 all the way down to 172. I think Apple makes new lows coming up over the next few weeks. And I think we retreat all the way down to around 162. Google is still hanging in there, made a marginal close to a new high today. But again, I don't like the action of the market. It seems bifurcated, and I don't really trust where the market goes, especially as we have already prepped going into September, which again, I think most people know is the historically worst month of the year, with average down month for September is down 1.4%. That doesn't mean that this September will do that, but we will see. We'll also see that, look at Tesla. It's gone from 300 all the way down to a low of 210. That's literally a 30% drop, made a little rally after that. But we are seeing huge volatility again return to this space. What's really gotten clocked, and you can't argue it, it's the banking stocks. This here is Bank of America. This is, here's JP Morgan. These stocks have fallen off drastically. Here's Charles Schwab, one of my holdings. However, it's literally down to the price I bought it at, and it makes me uncomfortable to own it. I can hold it for a little longer, but it just doesn't have the warm and fuzzy that it had before, which this is generally when the banking stocks decline. This is kind of a precursor to people not trusting what's going to go on in the future and figure that there could be some damage, further damage to the banking sector. It's not going to happen to JP Morgan, Charles Schwab, or Bank of America, but if it happens to some smaller industries, it does impact the sector as a whole. Again, the markets don't look good to me, despite the rally they've had. Pundits remain, unfortunately, deeply bullish, and they are always expecting some kind of new high and outrageous pricing. I think the jury is out. I think we need to see where this market goes as we get into September, and we'll see if there's a buying opportunity on the other side of this, say in a month or so. And I'm just hoping that the credit card data, if there is a buying opportunity, the credit card data won't prevent us from getting long that final instrument that's been missing from our portfolios, the spider, at hopefully a much lower price. So that being said, I'm looking at the time. I think I've burned through about 15 minutes, and I know Aaron has some things to talk about. So, Aaron?
Yes, absolutely. Thanks for the update, Kelly. Always so nice to hear like such a comprehensive overview done in such a short amount of time. So really appreciate that. We're going to do things a little slightly different today because of the video technical troubleshooting. So everyone can get to see this lovely screen with Kelly and my picture there. So we'll do this. So treat it a little bit more like a podcast, more of an audio thing than a video thing. But Kelly, one of the things that came up recently was, and we've been getting a lot of this kind of question because I guess we've been getting a lot of like new people coming onto the app and meeting us for the first time.
Mm-hmm.
And a lot of people have been very curious about the origin story of iFlip. So tell us a little bit about how this company came to be, like how you co-founded this company, how you met Randy, and what brought this Wall Street meets Silicon Valley kind of fusion with AI, giving birth to this company. Tell us a little bit about the origin story, and specifically, not everybody knows this, but Kelly came out of retirement to set this company up. So tell us a little bit about what the motivation was and the passion that went on behind that.
Okay, well, now I got my other side of my face being pictured as I tried to scramble and see why this camera doesn't work, even though it's blue, says it is. Yes, that's true, Aaron. I did come out of retirement. I spent my career, and it was a nice career in New York and some in London, where I worked for some very large money managers. That was towards the end of my career. My career at 2008, during the first financial crisis, was actually a very successful year. 2008, I made about 22% on assets that year in a very risk-free way. It was an easy year because I was basically, it was pretty easy to make money because we were short the stock market and long interest rate futures. Very easy way to make money in a year where the market was having a lot of trouble. That is generally what hedge fund managers do. Soon after that, though, I felt that the markets being in such a malaise, I had done well in my career. I was in my early 50s. I decided to retire. I moved out to Arizona, and I was just looking for things to do and what would be maybe something I could dabble in. I met Randy, Randy was a very impressive person to meet. Randy represents much of what I am not. And what I am not is a person that really understands how Main Street thinks. My career was spent talking to people that are extremely wealthy, extremely knowledgeable about the markets, and extremely risk averse. So the way you make it in the hedge fund world, fund management world, is you have a great amount of experience and knowledge about risk and where they are and how to measure it. It's ultimately always about measurement. And but Main Street doesn't ever get to see that. Main Street is expected to just invest for the long run, and then once it makes its investment, just hold those things until essentially you retire. And with the expectation that the markets always go up, you'll be okay when you retire. Mathematically, that makes no sense to me. But obviously, Main Street believes that. That's why they put their money into the market. But I recognize, much like most very wealthy people, and I mean extreme wealth, they realize that's just not necessarily the case. Extreme wealth does not have much of their assets in the market, maybe 25%. But they have access to other things that most of Main Street can't do. Randy was a great segue, and he knows people much better, and he knows the SaaS industry, the idea of selling a service and not just an expertise. So, what ended up and brought me out of retirement is the idea that I could marry this expertise that I feel I've learned into a service that Main Street could use. And that actually was very exciting to me. I kind of felt at some level I was giving back, almost like Robin Hood, but not Robin Hood the company, Robin Hood, like the guy with the green tights. I felt that it was possible for Main Street to be able to participate in products that generally very wealthy individuals only had access to, or people with good knowledge had access to. And so the idea of empowering Main Street and people that was really something I could identify with, especially after having a career where I had no never mind of what everybody else their investment experience was. Mine was never the same as I think most people that live in America. Um, I had a 401k plan, but it was done by the bank, and ultimately I managed that. So it made it a little weird that I was managing essentially my own money. But really, at the end of the day, it was Randy, I think, created a segue for me and for our software to be able to give Main Street a much higher level um, of sophistication and watching how money can grow without all the risk. So you still have people today that are on our platform that wonder, well, you underperformed for a year, but they forget. Sometimes people have a short memory and they feel, well, what about last year when the market was down? Nobody says anything. When the market goes up and you're not participating as much, that, what's the problem? No, there is no problem. It's just the way the markets work. So I love being at Flip. I like helping the people that are on this platform, and I will intend to endeavor and make it even better and better, both the interface and the results on a go forward basis. It's my passion now.
Yes, well, thank you so much. We obviously iFlip could not exist without you, Kelly, or Randy, right? Without the both of you. I do have one follow up, and then we'll go right to the trivia because I think people are going to be excited for that. But a lot of people think that because iFlip is only about 6 years old, like we established in 2016, 2017, around that time, that the AI is also only 6 or 7 years old. And a lot of more scrutinizing investors might be like, well, that's not that long of a track record. And I would
Mhm.
agree with that. Only that's not necessarily true, is it? This, right? Like our AI is actually founded upon the strategies and statistical analysis that you used for decades for Wall Street. So tell us a little bit about how much the iFlip strategy and AI is the same or different than what the actual hedge funds have been using for decades. If you could shed some light on that.
Easily. And this is actually a great question, and it should be asked by everybody. First of all, AI, especially this year, I think nobody will doubt. Look at NVIDIA tonight. It's up another $30, 8% on the post market because of the belief that AI will ultimately rule the future, and that is the way of the future. I'm not so sanguine completely about that, but AI really is more of a recent phenomena and not something that gone back 20 years. So let me explain that. AI has been developed in various forms over the last 10 years, and this came about mostly because of the ability to stack computers. AI is a very computer cycle centric business. You need to do a lot of computing to be able to teach something deeply. AI is also became ultimately is an extension, I think, of neural networks. Neural networks were the rage and the things that hedge funds and banks were looking at in the 90s and early 2K. But ultimately, when AWS came out and the computing power, of course, became more available to a wider swath of people and money, like funds and banks, they took advantage of it and they started to dabble into the AI arena, the various AI algorithms, if you will. And so AI has been really deeply developed for maybe 15 years, but really intensified over the last 5. Prior to that, the stuff that you see in the things we use on Flip are things that literally were built 20 years ago, and they were used literally even longer than that, variations of them that I used in my industry for years.
Can you give us an example of
Yes,
something like that the iFlip customer currently has access to that most retail buy and hold investors would never even think of, but Wall Street has known about for a long time and has been using for a long
absolutely. I think, look, everybody, if you knew how to use a computer well and you understood basic algorithms, you could get, most people could open up and have a Thinkorswim account and they could do something similar, but not as deep as we can, by being able to teach a computer how to use rules-based trading, money management techniques to be able to buy and sell a given stock or a portfolio of stocks. A lot of people could do that if you have the knowledge. How many people have the knowledge? Very few. I would say in America there might be 10,000 people,
It's certainly
maybe.
not taught in schools, let's put it
It's
that
not
way.
taught in school. It's not. It's knowing how to be proficient at certain apps and understanding math and understanding how to put it together to verify that what you're putting together has any kind of efficacy. And that takes statistics. My background, of course, is statistics. So at the end of the day, we've been using these things even much longer than the company's age. The company's age is around 6.5 years old, and these algorithms are still the same. And then, by the way, so are the machine learning algorithms. We refer to, by the way, AI, machine learning, essentially the same word. One's a little broader. AI is a little broader than ML. I wish you could see my face expressions. I think that would tell you a little more. Sorry, I'm only an avatar. But at the end of the day, these things have been used a long time. They've shown efficacy when I used them prior to this. And now the AI only strengthens the value of these things. I noticed, for example, some of the AI we use would have kept me out of trouble in years past had I been able to use it. Very disappointing, but I didn't have that information at the time. And it was there, it was always available to me, but I couldn't assemble it the way I can today by using these kinds of these algorithms that actually keep track of it for you, and by the way, maintain it. So it is an evolution. It will continue to evolve. It works without me, but what I do is I'm able to expand it and make it larger and maybe more accurate as we go forward. But mostly, it's about the expansion of using artificial intelligence to help supplement the various algorithms that actually execute your trades and manage your money on a daily basis.
Let me see if I've heard you correctly, and we need to wrap up after this because it is trivia time. But if I understood you correctly, it sounds like you're saying that what the iFlip customer has access to now, thanks to the advent of like AWS, cloud computing, and all of those kinds of services, is actually more powerful than what you were than the investing strategies you were providing for the hedge funds, a couple of decades ago. Is that
Oh,
correct?
that's a great takeaway. Definitely far more powerful than
Wow.
what we had before. And I would
So
challenge anybody to recognize this is not an easy task to put these things together and hook them up. Um,
yeah.
so
So there you have it, everybody. What you have access to in the iFlip software for just a very low nominal monthly fee is actually more powerful than what hedge funds had been using for in the early 2000s up in the past 20 years. This is straight from a former hedge fund manager, straight from the horse's mouth, and our the brains behind the iFlip AI it's directly from there. Okay. Now, it is trivia time, everybody. Now, I did mention that the trivia for this particular session is going to be slightly different. The prize, let's start with that one because that's what everyone's interested in, is actually of a $100 value. So we do have an events coming up, and apparently none of the slides are working. Kelly's video is not working, so you're stuck with just looking at me this entire time. Technical issues tonight, but so I don't have the visuals to show up here, to bring up here. But we do have an event coming up. It is in Dallas, a live event, a live investing seminar called Bulletproof Investing, September 21 and 22. And the prize tonight is a free ticket. It's a $97 value. It's a free ticket to this event. Now, the question, the winner of tonight's trivia prize drawing will be the answer to the following question. If I can bring this up, give me one moment here. The trivia question for tonight is: under which president was the Fed established? We talk about the Fed a lot here at iFlip, and we pay very, very close attention to the announcements that come out, what Jerome Powell says, because it literally moves markets, right? And so let me give you a minute or two to type in the answer here. Try not to Google, right? If you know this, you can beat the Googlers to the punch by typing in the answer ahead of time. This is something that I know a lot of people like to consume our content kind of like a podcast, like I mentioned before, but now would be the time for you to stop what you're doing for a moment, get on your computer, get on your phone, whatever it is, and type in the answer. Now, previously, when we do trivia questions, we qualify the winner, not just with the correct answer, but also that you have to be invested in a smartfolio in order to receive the prize, right? So Teresa won the gift card because she showed us that she was invested in a smartfolio. For this particular prize, we are taking that requirement out of the picture. So anybody, the first person to get the correct answer here will qualify for a free ticket to a live seminar coming up in September in Dallas. All right, let's see here. I do see the correct answer But let's see. Who do I see first? That got it the first. Okay, we do have a winner. The correct answer is Woodrow Wilson. The Fed was established in 1913 under the Wilson administration, and that means our winner for tonight is Lori Conrad. Congratulations, Lori. You are our winner tonight. You don't have to show us that you're invested in a smartfolio. We'll just comp you a ticket, and we hope to see you in Dallas. We did get a this is a funny one. I just want to share this because I think this is a funny one. Wilford Woodruff. I don't I don't know when he was in office, but that was a good one, a good answer. Nixon was a was a good one. Nixon, you may be thinking about when Nixon pulled us off of the gold standard during the Vietnam War. Maybe that's what you were thinking of. And oh, Lori, this was wonderful. Thank you, Lori, so much. We love you too, of course. We we know you very well, Lori. We don't have to get into it, but of course we love you very much, Lori. And that will do it for tonight's AI Circle, everybody. We hope to see you in Dallas. We will be emailing you all about more information about it if you want to just grab a ticket for yourselves, or if you're local to the area, you don't even have to travel that much. So if you enjoy this content, please consider liking and subscribing to the channel. Hit that notification bell so you don't miss any of our live streams. We're live on Wednesdays at 6:30 Eastern, 3:30 Pacific for both of our mailbag and our AI Circle. Next week is the last week. I believe we have a fifth Wednesday of the month here in August, and that's usually a break week for us. So we will see you again in 2 or 3 weeks. We'll see you back on September. The second Wednesday of September is the 13th. So we have a 2-week break. We'll see you in 3 weeks for another episode of the AI Circle. So until then, we're signing off, and good night, everybody.
Good night, everybody. Thanks, Aaron. Bye bye.
Thank you.